Brent, good to see you. You and me, we're on Recession Watch, us and the rest of the country, though, it feels like. So I just want to start with a pop quiz, and I want to hear your recession take. A, we're already in one. B, recession in the next 6 months. C, recession in the next 12 to 18 months. Or D, we will avoid a recession.
I think, like a lot of people, I would like to think it would be D. We're going to avoid one altogether. But our real opinion is C in the next 12 to 18 months.
Okay.
We think the changes that were made by the Fed and raising the interest rates, it will take a little while for that to work itself through. And then we're really going to feel the effects of that in the next 12 to 18 months.
Okay. So let's break down then some of the indicators that you are keeping an eye on. And one of them is the unemployment rate. So claims for unemployment benefits rose by 3,000 to 217,000, which was lower than economists have predicted. How do you factor these numbers into the overall health of the economy?
Yeah, so I think it's a good sign of the economy, and I think it's kind of a license for the Fed to remain hawkish. So as they're looking, their major goal is to try to tackle inflation. So as long as those inflation numbers stay high, they want to remain hawkish. That being said, when the unemployment is as low as it is, it's a good indicator for them that they can continue on with that policy.
And so you hit the nail on the head here, right? Markets do expect the Fed to back off its hawkish stance unless inflation remains stubborn. And I just want to take a look at other historical Fed rate hikes. We are the yellow line at the left, and you can see the steep increase that we're all living through right now. So do you have any predictions on future rate hikes?
Yeah, it is dramatic to see it when compared to other years. So I do feel that until inflation ticks back, they're going to remain hawkish. So I do expect to see continued rate hikes and probably similar to the ones they've done over the past few months. But the two things, like I was saying, they're going to keep an eye on. If inflation starts to wane, then they're going to start to back off or slow down. Or if unemployment starts to dip too high, they're going to take a look at backing off of that because it's really going to, ruffle some feathers and can further push us towards a recession.
Right. This underscores why it's so difficult to navigate this hard landing versus soft landing. So I just want to kind of end on a good note here because I was surprised. The Dow actually had the best October ever. The S&P the best October since 2015.
Yeah, that was a nice little market rally. Once again, that brings up a perfect example of you can't try to time the market. So stick with your plan, stay invested with your risk tolerances, and then just allow the market to do its thing. Because there was not a tremendous amount of news that said why the market should pop like that. No major headlines, yet we still had a really nice October. So, and this graph does a great job of explaining what happens when you pull out of the market and sit on the sideline and try to hide from the pullback. So about the time you get pulled out, that's when the market's going to take a nice little pop. And as you can see in this chart, you're going to be really negatively affected if you miss some of those good days.
Right. This shows a $10,000 investment over a 15-year period. If you stay fully invested, you're the dark blue line on the left. And if you just miss 10 days, it's amazing what happens to your investment, Brent. And I know, though, you've had phone calls with clients. It is such a normal reaction, though, to ask, is it logical to stay in the market right now? Right.
Absolutely. Yeah, we get that question often. And, it's when you're checking your account every day and you're seeing things slide like that, it can be very nerve wracking. But the plans that we put together, that's why it's so important to work with a professional, is we already know this is going to happen. It's going to happen over every investor's career. And so we should have built you a plan that can weather that storm. And so stick with it. And then also expect if there was something dramatic that needed to be dealt with, we'd reach out.
Right. Right. And it does help even just to hear it. We know, Brent, that you and Kim have built this volatility already into people's portfolios. It's just helpful to talk it through. So, of course, if somebody has questions about what they're seeing or the headlines they're hearing, what's the best way to reach you?
Sure. They can go to our website, www.young-wm.com, or they can call the office, 614-430-8383, and then Becca will get you connected with one of us.
All right, Brent, thank you.
Thank you.